Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Kevin Davitt, Head of Index Options Content at Nasdaq, to discuss growth in Nasdaq 100 Index Options volume. Kevin, it's great to see you as always. Welcome back to Trade Talks.
Jill, always good to see you. Happy summer, and thank you for having me back.
All right, you got it. That is right. We started summer yesterday. Let's kick it off where we often do and get into some product here. What's your take on what's going on in the Nasdaq 100 Index and the options product?
So that's a topic that I'm never going to tire of discussing. The short answer is so much interesting stuff is going on in the NDX market. So let's talk through a couple of them. First off, this morning we had standard NDX options expiry. That's the day where I come and get to speak with you and your audience. When you look at the broader options market, this was the largest expiration ever in terms of notional exposure rolling off. Now, that's in part driven by increased volumes in index options and the historically high price levels for those indexes. It's not the largest ever in terms of open interest. That's typically on a December or January cycle. Yesterday was the highest volume in NDX in many, many years. I think you have to go back almost a decade for more volume, like early 2015. I have spoken with you a couple of times about the shift toward index derivative exposure as a means to manage macro risk over the past 2 or so years. And I think that continues apace. Beyond that story, the concentration at the top of indexes in terms of the names with the most significant weights continues to garner attention. The crux of that narrative has spun around NVIDIA, which became briefly the most valuable company in the world earlier this week with a valuation around 3.3 trillion. They surpassed both Microsoft and Apple. The visual on the screen plots the market cap for those three companies going back to the end of 2022 when OpenAI first introduced ChatGPT. So it has been quite the run there. Now, one way to express a view on NVIDIA, which I know you have had people on to talk about, is directly in the options market in that name. NVIDIA options are higher by about 180% relative to November of 2022, which is the time frame we're looking at. Another way to potentially gain exposure to NVIDIA, Apple, Microsoft, and 98 other names is as a part of the macro view and using NDX options. So over that same time frame, NDX volumes are up 134%. So that brings me to my second point here and a follow-on visual. There's an argument to be made that the broader introduction of generative AI to the masses has been like a zeitgeist shift. I followed the relationship between the level of the Nasdaq 100 index compared to the S&P 500. And in this visual, you can see two extended periods of Nasdaq 100 outperformance. And this is over the past 5 years. The first one on the heels of the COVID recovery. And in that situation, technology writ large carried the market's water throughout 2020. And then that happened again starting in late 2022, which aligns closely with this NVIDIA and AI narrative. Now that ratio continues to establish new highs in favor of the Nasdaq 100. Now, whether you believe that trend is likely to continue, is more likely to reverse, your view could be expressed using index options, and I think we are seeing that broadly taking place. Yesterday was another example of significant index positioning. So that was a lot, and just to recap, NDX index options have been booming, as has our volume, which has run in parallel with the outperformance of the index itself. And I think that bodes really well for future growth. I think that end users want NASDAQ 100 exposure within option-specific parameters.
Right. So, Kevin, let's dive a bit more into that volume growth. How is it playing out? Is it institutionally driven? To your point earlier, you said PMs are potentially using it for risk management tools. Is it individuals? Is it focused on the shorter maturity options?
That is a question we as a group get frequently, and I think it makes a whole lot of sense. Stepping back a little bit, historically, index options had been considered institutional products because they tend to offer large notional exposure, which is most certainly the case with an NDX measuring in the ballpark of 20,000. Now, at the exchange level, we do delineate between customers and non-customers or professional volume. So the volumes in NDX over the past couple of years have been exceptionally balanced as has the growth that we've seen over that time frame, so roughly 18 months. On average, there is slightly more professional volume executed in NDX, but it's by a very small margin. This is on an average daily volume basis. Now, beyond that, we've seen individual average daily volume increase in tandem with institutional or customer versus non-customer. And so we're breaking this down on a percentage basis. So relative to like 2 years ago, average customer volumes, individual volumes are up about 138%, whereas institutional volumes are up by 133%. It is nearly uniform pickup when you look at those two different demographics. In terms of, you brought up kind of tenors or maturities, in terms of that exposure preference, there has most certainly been meaningful volumes concentrated in options that expire within a few days. You've talked about it a number of times. We've observed it across the industry. And it seems like both individuals and institutions have found strategies that they can monetize using those shorter dated exposures. Now, there's probably more outright exposure in the shorter maturity contracts and more spreading using longer dated maturities. And I do not want to lean too heavily on the term balanced, but the short dated flows have remained balanced. Big picture, I think that the markets in general, they seek balance, whether we're talking about cash equity markets, fixed income, derivatives. Balance is key. And in the rare situations where imbalances grow, that's probably more risk, and you have the potential for outsized move or risk being repriced quickly. When you look specifically at the NDX options, we've observed continued interest in upside exposure relative to downside strikes, and that's playing out across index products where we've seen skew levels depressed relative to history. That's particularly interesting with indexes essentially at all-time highs. So recapping, NDX growth is outpacing the competition, and we have unusual underlying supply-demand dynamics playing out across the index options landscape.
And Kevin, finally, in the last minute here, when you and the index options group look ahead, what's important? What's on the group's radar?
So just to be clear, it isn't just our index options group that's interested in NDX growth. You know full well that there's attention being paid at the highest corporate levels here, which is really exciting. We're being well supported, and that Nasdaq brand equity goes a really long way when we look to get in front of new audiences and explore different avenues for growth, which we're clearly focused on continuing to grow volumes and our market share. We have to be out there sharing a compelling narrative, talking about use cases and what distinguishes one index from another. So just briefly with that in mind, we've expanded our team recently. We now have a dedicated salesperson who's pounding the pavement and Bloomberg chats. He's an industry veteran, and he's going to focus more on that institutional growth. And there's so much opportunity there, both domestically and internationally. So Nick, welcome to the team. And we are also excited to welcome another young woman to the group. She's just finishing up grad school at UPenn. She's joining the team in a quantitative analyst role. So welcome to Eleanor. We're going to keep telling like that story of the Nasdaq 100 as the modern day industrials or the benchmark of the 21st century. That's catchy, but we certainly need quantitative analysis behind it. And we lean on this group to get in front of as many audiences as possible. We believe that we can shift that default behavior in index options with our product and with persistence. And we're working with a bunch of third parties to tell this story too, whether it's brokerage firms, product creators, wealth advisory groups. The appetite, as you know, for optionality is very high. I think end users understand the potential benefits and the trade-offs, and they value that ability to put really specific parameters around their portfolio, whether it's somebody just starting to grow a nest egg or some group managing billions. They are able to do so very precisely given the outgrowth of expiries. So we're going to keep telling that story that motivates people. I'd like to think that it's been successful thus far, and I'd like to also thank you for opportunities like these to reach out to the Trade Talks audience.
Yeah, of course, Kevin, we appreciate it as well. Congratulations on building out a really robust structure within the framework of the index group. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.